So you've heard people say invest in index funds, but what does that actually mean? Hi, my name is Chisom, and today I'm going to be dressing like an angel to explain what index funds actually mean so that you can understand in the simplest way possible. So first of all, an index fund is a type of investment that tracks a market index. Think of it as buying a tiny piece of every company on a list. For example, if you buy an index that tracks 500 companies, like Fortune 500 companies, it means you own a tiny piece of 500 companies. That's crazy, right? It's like buying a fruit basket instead of just buying one apple. And now if one fruit goes bad, you still have the others. That's what an index fund basically means. Now, how do index funds work? So basically, they are passively managed. It means that you're not the one managing them. It's automatic, basically. So let's say you buy an index fund that tracks 500 companies. And let's say inside the company, we have Apple and Meta. Let's say Apple leaves the index. Normally, you're supposed to have 499, but no, the index will automatically update itself to 500 by adding another company to the list, making it 500. You don't even know that happened. It just happened for you, okay? It just automatically updates itself for you. Now, the benefit of index funds is that it's diversified. It means you're basically tracking a lot of companies. You're not dependent on one company to make profits. And therefore, it reduces risk because you basically own many companies. Another advantage is that it is relatively cheaper than actively managed funds. What I mean by actively managed funds is it's cheaper than buying single stocks. I'm not saying you shouldn't do that, but I'm just comparing, right? It's cheaper. Individual stocks means that you probably have to actively check it, see how they're doing and stuff, but index funds manage themselves for you. But individual stocks, so relatively index funds are cheaper. And it's actually great for beginners because now you don't even have to research. You don't have to research over 500 companies just because you want to buy an index stock. You just buy an index stock and it manages it for you. So for example, you invest 50,000 naira in an S&P 500, which means 500 companies, yeah? So even if some of the companies in there are not performing well, your general outcome in that market is still going to be profitable because the other ones are doing well. So it's more of like an average profit that you're going to be making. So it's different from when you're tracking an individual stock and it's not doing well. Obviously you're making a loss. If it's not doing well, you're losing money. But in this one, even if it's five companies, even 10 companies are not doing well in an index stock, you have over 490 other companies that are doing well. So definitely your investment is not even remotely affected. So normally I would do a comparison, like a proper comparison between index stocks and individual stocks, but I already made a video on that, so go watch it. I'm not going to do it again. Now I'll give you a few tips for beginners specifically. The first one is to start with a broad market index. That's why I always recommend you start with index funds first as a beginner. The second one would be to invest regularly, and that's where compounding comes in. So even if you're not starting with 1 million naira, if you keep investing 5,000 naira, 10,000 naira continuously, eventually it grows into something, really tangible. So that's what compounding is. The third one is to focus on long-term growth. Now, what I teach is not, I'll say it again, what I teach is not stock trading. I'm teaching stock investment. Stock trading is you invest today, you sell your stock tomorrow because they made a little profit. I'm not doing that. That's not what I'm here for. You can trade if you want to, but that's not my field. Okay, so focus on long-term growth. That's what I'm teaching. So when you're building future wealth here, we're not building biscuit money, hair money. You want to buy hair tomorrow. No, that's not what I'm doing here. And finally, don't panic if your stocks dip. That's where diversification comes in. You have other ones that are doing well for you, so you have no reason to panic. So now you know what an index fund is and why it's a powerful tool in the stock market. In the next video, I'm going to be breaking down the S&P 500 and why everyone talks about it, so you can understand why it's the world's most popular index fund. As usual, please follow me, like, share to your friends who you think might be needing this, and I'll be seeing you in the next video. Bye-bye.